Hello, this is Edwin Epperson with Blue Bay Capital. Today we're going to be talking private lending, most common risk. These are risks that many private lenders face, and I wanted to address these for you, whether you are new or seasoned. These risks are something that every private lender should be aware of, and some of the most common ways to mitigate those risks. So let's talk about the risk mitigation. We're going to cover the most common risk, not all of them by any stretch of the imagination, but we will cover the most common and most often asked questions from private lenders as far as how to mitigate risk. We're going to cover the best solutions. This is sort of an overview of any solution that you could offer or any solution you can find that can mitigate as many of the risks as possible. And then we'll dive into what Blue Bay Capital specifically offers through our turnkey private lending solution. So first, let's go ahead and start with the most common risk. One of these is the market risk. What happens in the market? And this is a question I get from many different investors. What if property values tank like they did in 2008? Now, this is a great way to mitigate that risk. Number one, you can maintain low loan to values, meaning if the property is worth $100,000, you're only going to lend $50,000 or $60,000. That is a 50 to 60% loan to value. So that's a low loan to value. You can also ensure that the borrower always has significant skin in the game. Skin in the game is another word for down payment or capital at risk, whatever the case may be. You want to make sure that the borrower has something significant to lose if they decide to walk away from the project. Also, you want to do more short-term loans than long-term loans. Have more short-term loans in your portfolio than long-term loans. So what about property value risks? Well, these risks are common, and here is a question that I get from many private lenders is, I don't know how to evaluate a property's value. Well, this is a great way to mitigate that risk and even answer some of those questions. Number one, you always use a trusted third-party evaluation method or model, or you simply always use an appraiser. Whatever the case may be, you want to make sure that you're using somebody who is trained in the skill of evaluating property values, as well as they're familiar with the local market. Number two, you want to find your appraiser before you need one in your local market. As I'm recording this video right now, the market is absolutely going gangbusters across many places in the United States, Florida particularly. And so a lot of these professionals are busy. And if you don't have an established relationship with someone before you need one, this could cause delays to you getting a closing, as well as complications with communication and other factors. So make sure you identify who your appraiser is going to be or whatever third-party evaluation product you're going to use before you need one. And of course, if you're unsure of the property valuation, let's say you get the appraisal back, you get the valuation back, you're just not sure if that's really what the true value is. As the private lender, you have the right and the ability to never lend more than what you're comfortable with. So if you feel that the value is something different than what's being presented, you as a lender have the right to say, you know what, I'm not comfortable loaning my maximum loan to value on this property. I'm going to loan less. That is perfectly okay. Another risk, of course, is the risk of getting scammed. This is a question I have seen and get often is, I don't want to be scammed. Who can I trust? Again, this is some great ways to mitigate that risk. You always ask for references in past business relationships. Do your due diligence. Get on Google. Do some research on that borrower or on that professional if you're using professionals, which you should be using throughout the life of the loan. Speaking of which, you always use licensed industry professionals for all of your tasks. Use a licensed real estate agent. Use a licensed attorney for your title company and your escrow. Like, these are really important functions, but many people just don't think about. And I would say that more often than not, the private lender is convinced by the borrower who they've met at a local real estate investment club or group or some type of course or conference that the borrower says, well, we don't need to go through all that. It's just going to add more money. It's going to add more delays. Let's just go this way. And the private lender, who should be fully protected, ends up being exposed in a lot of different ways by doing that. So always know the laws of your state and work with people who follow and conduct business according to the laws of that state. So know the laws of your state, what you can and cannot do, and what the borrower or any other professional that you're working with, what they can and cannot do in that state. Here's another question is, asset is damaged. What are those risks and how can you mitigate that? This is a question that is most common. What happens if the property is destroyed or damaged? This is a great way to mitigate the risk, and many people think, well, that's an easy answer, but sometimes the easiest answer is not the most obvious answer. Always require property insurance and make sure that it is paid for by the borrower. That goes without saying, but make sure that the property insurance fully covers you as a private lender. One of the team members that you need to have on your team as a private lender is a third-party private property insurance provider. This is somebody that you can run a potential deal by and say, hey, listen, is this insurance coverage adequate for me as a private lender? And they can give you some feedback and what you should be requesting or things that you can make changes to your required property insurance. You're also going to want to make sure that you or your entity, whatever you're making the loan out of, is named as the mortgagee and loss payee on the insurance clause. This can be found in your evidence of insurance or the EOI or the COI document that you receive from your insurance agent. And then, of course, discuss with your insurance agent and the borrower the property coverage to make sure that you are protected and require this coverage at a minimum. For instance, I hear this a lot from investors. Well, it's not hurricane season. I don't need to have named storm wind coverage. In the state of Florida, it is highly recommended that if you as a private lender are securing a property with a loan, you enforce and ensure that that borrower has named storm coverage. You never know when one's going to pop up. And just because maybe the average hurricane season, when the season or the period of the year that we get hurricanes is maybe on average between August and September, doesn't mean that you can't have a hurricane in May. So just make sure that that coverage is in place and paid for by the borrower. Here's another risk, the borrower risk. A question I hear often is, what happens if the borrower defaults and doesn't make their payment? This is a great way to mitigate that. Number one, you always ensure your lien is recorded and know your position and all the other position holders. So hopefully you are only doing first position loans. If you're doing second or further junior positions, make sure that you know all senior position loans to you and how to contact them and that they can be contacted. This is really critical, especially if you're going into second position. Number two, always require significant skin in the game from the borrower. I can't stress this enough. Make sure that the borrower has money at risk in the loan. If they decide to walk from the loan, you want it to hurt. You don't want the borrower's ability to leave a loan, leave a responsibility easy. And then, of course, for you private lenders that are newer and inexperienced, make sure to find experienced real estate investors and you're loaning to experienced real estate investors. That's not to say that you cannot loan to inexperienced real estate investors, but if you are a new private lender and you don't know your processes, you don't know how to underwrite, you don't know how to process a loan, this could expose some significant gaps in your underwriting and really put you at risk if things go south. Your best solutions. So always work with and through licensed professionals. I can't stress this enough. Make sure that you are working with and through licensed professionals for your private lending. You always require that the borrower have skin in the game. Again, I cannot stress this enough. These are best solutions for any risk. Like these solutions will help you mitigate 90% of all risk that pop up in private lending. So make sure that the borrower has money, cold hard cash that they're putting into a project. Make sure that you as a lender get lender's title insurance policy. This is different than the borrower's title insurance policy. If you ask the borrower or the title company, hey, I want to make sure that there's title insurance on the property, well, that's in place if the borrower is going to get it. But you as a lender also need title insurance policy, and you can request and require that to be made on every loan that you do. Always require that the property insurance has you or your lending entity named as the mortgagee or loss payee. You want to make sure that that is in place and that you are fully protected and that the underlying collateral that you have loaned against is also protected. You also want to make sure that you stick to your maximum loan to values. In the market as it's crazy right now, a lot of private lenders are willing to go above and beyond what their maximum loan to values are. Do not do that. Stick to your maximum loan to values. You begin to loan more than what you originally had planned or what you thought would be a safe loan, you're exposing yourself to more risk, maybe risk that you are not comfortable with or you were not comfortable with when you first set out to do private lending. And always only lend on properties that you would want to take back. Worst case scenario, things fall through, everything goes to crap. Well, you want to make sure that you're able to take back an asset that you are okay be owning and managing through the entire process. So how does Blue Bay Capital Solution differ, and what can we offer our capital partners? So we offer turnkey private lending for our investors. And one of the things that we always do is work with licensed professionals such as the people that you see below right here. Another solution that Blue Bay Capital has is we always evaluate the property, the borrower, and the project. We determine the values. We confirm that the borrower's experience and liquid positions before making the loan. And we ensure all permitted work is being completed and that the borrower has a clear and descriptive scope of work and a timeline to completion. Another aspect that Blue Bay Capital ensures is that we're in as least a risky position as possible. And we make sure that the borrower has money that they are putting down, that they have cash reserves, and that the market outlook for that project is healthy and that the market is not shifting or correcting or worst case scenario, crashing. And then of course, we are always ensuring that we have enforceable insurance on every loan. We require titles policy, lender's title policy, and we also require that the property insurance name us as the mortgagee and loss payee. We also require a recorded first position lien against all assets that we are collateralizing. We also have a promissory note, which is signed by the borrower and anyone else signing for that loan, as well as we have disclosures and statements that the borrower and all signers sign, reflecting that this is a business loan to a business entity secured to real property. This keeps us outside of a lot of the government regulation and oversight laws that govern consumer lending. As well, we service every loan from the start of origination all the way through reconveyance. We handle the escrow funds for construction. We order and evaluate the draw process. We order a feasibility study before the loan is even made. And we ensure that all lien release waivers are signed by all contractors being paid directly from escrow. So all of this really does set us up to discuss two different roles that you can have as a private lender. You can be an active private lender, meaning all of the things that mentioned before, as well as hundreds and hundreds of other different risk mitigation techniques and processes and underwriting are all enacted by you as a private lender. Or you could be a passive lender through and with Blue Bay Capital as a capital partner. What does this mean? Well, for one, if you decide to be a passive investor or passive lender through Blue Bay Capital, is the time freedom. All of the time dedicated to underwriting and processing a loan file and coordinating closing and getting everything across the table, it's all taken from you. We do all of that for you. There's nothing that you have to do. There is no experience required. You could be absolutely green behind the ears. You have no private lending experience whatsoever. And you could still invest through Blue Bay Capital's turnkey private lending solution and invest in the private loan secured to real estate. We also call this file cabinet money. You don't even have to leave your house to walk to the mailbox to get the check because the money is automatically deposited into your bank account. This is the truest form of passive investing that generates passive income. Please know that there is a difference. Just because you're investing into an asset that generates quote unquote passive income does not necessarily mean that it is a passive investment. Owning real estate rentals is not a passive investment. Ask anyone who manages their own rentals. That is not a passive investment. So private lending is truly the most passive form of investing that generates passive income. This is the truest form of leverage. Not only are you able to partner with other sophisticated passive private lenders through our lending turnkey solution, but you're also able to leverage time, knowledge, and experience. You're able to leverage Blue Bay Capital's time, knowledge, and experience in what we have done over the past few years of creating this turnkey passive investing solution for our private lenders like yourself. And then, of course, you're able to participate and diversify your investments across multiple loans and to coordinate and participate with other sophisticated private lenders. So the real question is turnkey private lending offered by Blue Bay Capital for you? Well, if you're truly seeking a hands-off passive income approach to investing, then our turnkey solution is for you. If you're looking for a way to diversify your portfolio outside of bonds and dividends, private lending is for you. If you're looking for alternative investments where you can think, analyze, and invest like the banks, then private lending is for you. My name is Edwin Epperson. You can reach me on this email, and this is actually my direct cell phone or my direct line, that you can reach out to me. I would love to be able to answer any questions that you have concerning Blue Bay Capital's private lending turnkey solution. And I look forward to helping you build, grow, and protect your family's generational wealth through private lending. God bless, and make it a great rest of your day.